Good morning and welcome to another live technical analysis session. As usual, we're starting off with the euro. The euro does appear to be moving in a predominantly sideways fashion between that S1 and R1 support and resistance level, which we had placed yesterday. The RSI has dipped below 40, which does imply a bearish market sentiment. Now, yesterday we did say that we were going to be discussing the USDPI rates. The USDPI rates on a headline level for the month of November are expected to accelerate by 0.1%. The core is expected to remain steady at 3.3%. Now, those two financial releases essentially would imply a persistent and perhaps stubborn inflationary pressures in the United States of America. That, in turn, could provide the Fed with some leeway should they wish to remain on hold in their meeting, which is set to occur on the 17th of December, with the announcement being made on the 18th of December. So that's when we get the Fed's interest rate decision. We are in the Fed's blackout period, and thus the release of these CPI rates could intensify the market's expectations and could lead to increased trading volatility. For the euro against the US dollar, you are seeing that the daily candlestick is moving in a downwards fashion. For a bearish outlook, would require a clear break below that S1 level at 1.0470. If we drop into a 15-minute time frame, you can see that it formed a lower high and is breaking this lower low. If the 15-minute candle closes below this particular level here, then we might see it taking aim for that S1 level we have seen together on the daily time frame. On a 4 hour, it does appear to be moving also in a downwards fashion, so that is bearish in itself. 1 hour candlesticks as well, implying a bearish market sentiment with RSI at 33. So it does appear that the euro is moving in a relatively downwards fashion, at least for an intraday period. The release of the C pairs could reverse the pairs direction or could intensify the downwards momentum that we are seeing currently. But if it bounces off that S1 level, we would maintain a sideways bias between S1 and R1. USD JPY. Some BOJ policymakers would support a potential rate hike if it was placed on the table in the bank's next meeting. Now, we are seeing a bit of a retracement for the USD JPY, having broken above that R1 level of 151.30. So this is resistance now turned to support. The dollar is strengthening today on the anticipation of the CPI rates, I would say, but I would not be surprised to see the yen gaining some traction towards the end of the year. But for today, we are seeing a strengthening for the US dollar against the euro, the JPY. I'm assuming the pound as well. Yes, that is correct. The Canadian dollar, which we do have the BOC's interest rate decision later on today. We'll discuss that in just a few moments. But for now, we do need to go back to the USD against the JPY. So it's broken above that resistance turn to support. What we're doing currently is simply just readjusting those support levels. So R1 becomes S1, S1 becomes S2, then S2 becomes S3. So we can see that it is still a valid resistance turn to support level. Now, one could say that this week here would justify a more significant support level, but this was a prior low, and if it does retrace lower, I would expect we might see it, seeing some support at 151.30. So that's S3, this becomes S4. For R1, we could keep that R2 level, but it might be a bit more prudent to add an even closer level, something a bit newer. So this wick here found support. This acted relatively as a resistance barrier, broke below, tested. So this is an intermediate R1. We could readjust that R2, placing that higher. So at this high formed by these two candles, order block, so bullish candle came back lower, tested this as resistance, so 155.35. So accumulation of sell orders, that could be our new R2 level. And we can place intermediate R1 at 153.20. So this would be this R1 level. And then we have R3 at 158.35. And then let's add the text label to indicate R1. It's going to be a relatively quick session today. So this is R1. So we have the support and resistance levels. RSI breaking above 50 might imply a switch from a bearish towards a bullish market sentiment. It makes sense. I wouldn't be surprised to see it testing that R1, retracing lower perhaps to S1, and then continuing on its ascent. But we do have the CPI rates, which could just allow the dollar to gain against its counterparts. Moving on to the British pound, breaking below that upwards moving trend line. RSI is close to 50, but we could be seeing a retracement back down to that S1. So we are maintaining a bearish outlook for the pound against the US dollar, aka cable. We would like to see it testing S1, so validating this as a support level once again. Breaks below, could aim for S2, and then lower than that, we have S3. As you can see on your screens, to the right hand of your screens, you can see the support and resistance levels. Now, if it bounces off S1, we would opt for a sideways pass. If it does manage to break above R1, we would opt for a bullish outlook. Next target could be at 1.3040. Moving on to the Canadian dollar. CAD-OIS currently implies an 88.8% probability for the bank to cut by 50 basis points during their interest rate decision, which is set to occur during today's American session. Now, there are two scenarios. One, if the bank cuts by 50, which is what is being expected, we could see the dollar gaining against the Canadian dollar, so the US dollar, so USD CAD gaining. Now, there is an issue. If they do cut by 50, that's already priced in. So attention turns to the bank's accompanying statement. If it is dovish in nature, i.e., more rate cuts are to come, we could see the dollar further gaining against the Canadian dollar, potentially breaking above this R1 level at 1.420 and taking aim for 1.4340. Now, the second scenario is if the bank cuts by 25 or remains on hold. The possibility for a hold is not in play currently, but if they do cut by 25, then we could see the Canadian dollar gaining slightly. And why is that? Well, with 50 basis points been priced in, a 25 basis point cut would be something that is not currently expected predominantly. And thus, we could see people exiting positions or the market readjusting itself to the new data. So anything less than 50 could potentially aid the CAD temporarily, and then we could see the dollar continuing in its ascent. So in such a scenario, if they cut by 25, we could see a retracement back down to S1, and then potentially the US dollar gaining and taking in for R1 once again. So retracement and then continuing on its ascent. The RSI is currently at 70, which does imply a bullish market sentiment nonetheless. So we would maintain a bullish outlook for the USD CAD, bearish for the pound, bullish for the dollar against the JPY. For the Australian dollar, it's broken below that S1 level of 0.6360. So this is support turned to resistance. We are maintaining our bearish outlook for the Australian dollar. Now, there are some reports that the Chinese government may be willing to allow the yen to depreciate with the yuan, apologies, to depreciate in anticipation of the tariffs by the Trump administration in 2025. Now, that could boost our exports, but it could make it more expensive for imports. We might see a reduction on imports, which in turn could weigh on the Australian dollar for the reasons we've mentioned yesterday and given their close economic ties. So we could see a further weakening of the Canadian dollar. Moreover, CPI rates once again for the USA coming higher than expected or implying an acceleration or persistent inflation pressures could allow the dollar to gain against the Australian dollar. USD we have the SNB's interest rate decision tomorrow, currently moving in a relatively sideways bias. Our size at 56, still closer to 60 than 50, but looking at the chart, it's a relatively sideways bias. Wouldn't be extremely bullish on the particular pair. We do have the SNB's interest rate decision. Nonetheless, for a sideways bias to continue, remaining confined between S1 and R1, as you can see to the right hand of your screens. Continuing, we are going to be looking at oil. Oil is still moving in that sideways moving channel we defined between 66.45 and 72.10. So we are maintaining that sideways pass. It's broken above that downwards moving trend line, which further amplifies our call for a sideways pass between S1 and R1. For the precious metal, could be influenced by the CPI rates as well, given its inverse relationship with the US dollar. Currently, the precious metal does appear to be moving in an upwards fashion, which is particularly interesting, given that the dollar is gaining against its counterparts, but failing to gain against the precious metal. We would opt for a bullish outlook, and the reason is it's broken above R1, which is 2,685, so that is resistance turned to support, but it does need to clear this bullish candle here for that bullish outlook to continue. continue. Target would be 2,790, which is that R2 level, which is now R1. Higher than that, hypothetical resistance at 2.9K. Moving on, we have Intel. Intel is moving in downward fashion, taking aim for 18.90, which is our oldest one support level. Microsoft could be retracing back to $437.90 per share before moving higher towards 453.40. Now, there is something I would like to discuss today, and I don't know if we do have the charts open, and that is Google. Google has announced its new quantum computing chip, which is significant in itself. It is a technological leap forward. I've actually forgotten the name of that chip. It was the Willow chip. Yes, that is correct. So the Willow chip was announced yesterday by Google. You can see by the gap up in Google's stock price, and it actually tested slightly that resistance level at 181.50. We are bullish for Google. This technological leap forward could be very beneficial for the company stock price. It is incredible in itself. You can look at Google's statement that was released yesterday. Overall, we are maintaining a bullish outlook for the company stock price. Target for today could be at 188.27 for the bulls. Higher than that, we could move towards 100 and aiming for this high here, 191.05. But overall, we are maintaining that bullish outlook for Google's stock price. So that is very significant. Deutsche Bank moving in an upwards fashion. JP Morgan, not that bullish. Dow Jones 30 retracing lower, taking aim for that old resistance level at 42,675. So that's the next possible target for the bears. Their size moving towards 50, testing that R1, which is now S1, and remaining in a sideways fashion. If it breaks below, taking aim for 43,380. If you look at the Nasdaq as well, moving in an upwards fashion predominantly, but we could be seeing a retracement. Same goes for the S&P 500, resting on 60,000, 6,050. So validating this as a support level. If it breaks below, we're taking aim for 5,885. That will be very interesting to see. Once again, dictated by the US CPI rates later on today. Boeing has resumed production of its 738 MAX airplanes. Now that is good for the company's stock price. But have they actually fixed the issues in their quality control? That remains to be seen. And I think we can say it depends if one of their planes falls out from the sky once again. That is unfortunately a harsh reality for Boeing. We will have to see whether or not their planes continue to have issues, and some of those were wheels falling off from planes, doors, issues with their logistics software that was in 2016, quality production control issues. There were issues with their windows in the cockpit as well. So let's see what happens with Boeing. It has broken above this prior high, so it is bullish on a technical basis. Fundamentals remains to be seen. Eurostox 50 has moved higher, breaking above R1, R2, and R3. That R3 level is now acting as a support level. That is a swing high being formed. We would like to see a swing low being formed. So if it breaks below that S1 level, which is R3 on your screens, would not be surprised to see it moving towards 4,876, forming a higher low there, and then potentially moving higher. But this depends. Let's see what happens in France and Germany. As a reminder, France is going to announce their new prime minister on Friday. That is according to President Emmanuel Macron. And for Germany, we are having early elections in February. Vote of no confidence is set to be taken during this month by the German parliament, with early elections set to occur on the 20th of February 2025. We have 5 minutes left together. If there is something you would like to see, now is the time to ask. Let's look at LVMH as well. Nice rebound. Wouldn't be bullish exactly. These three candlesticks not inspiring that much confidence. Sideways between 594.54 and 665.7. Would like to see it bouncing off S1 and moving higher. Well, a clear break above R1 would be sufficient for a bullish outlook, but currently looks to be moving in a sideways fashion. IBM, bullish engulfing candlestick pattern that is bullish in nature. Mm, Not exactly bullish. McDonald's resting on that S1 level 299.55. I want to see a break above, so it's closing in terms of a complete body above that S1 level for me to be convinced that it is moving in an upwards fashion. And then Tesla, Tesla moving higher. I did say that I was expecting to see a retracement from Tesla's stock price, but if you look at the news, SpaceX valuation is incredible. They're expecting an IPO, and because it's not public, maybe that positive sentiment might be leaking into Tesla as well. But still, I think at some point we might be seeing a retracement from Tesla's stock price. But overall, it is bullish, above 70, strong bullish market sentiment. Also does imply that it is a bit overbought, which is why we're supporting the hypothesis for a retracement. FTSE 100, as always, remaining in a sideways fashion between 8,180 and 8,330. RSI is at 50. Sideways bias. Would like to see it retracing and testing S1 once again before remaining in that sideways fashion. The sideways moving channel, which has been violated on a couple of occasions, but overall, violated, came back down. Violated below, came back in, stayed between this particular region. And we are on a daily time frame. Euro against the Australian dollar would be maintaining a bullish outlook for that, even without seeing the technicals. What is interesting is ExxonMobil. It is breaking below that S1 level of 113.13, which we placed. So now we would opt for bearish outlook for the company's stock price, taking aim for 108.18. We do have S4 at 98.15, so it does. So those are potential targets for the bears. Now, if it retraces, it could stay between that S1 and R1 level. No, I don't speak Arabic. I only speak Greek and English. We would move that R1 level lower based on the current price action, and let's simply readjust our targets. So those resistance levels. This is nice for R2. Can keep this. It's too far away from that R1 level. But it will have to do. I would place R1 at 117.13. And if we round that down, 117.10. So let's just place the new resistance levels, 117.10. Prior high, significant selling pressure, wicked above to gain even more liquidity and then move lower. So that is a valid resistance level for me, for R2. 121.55. So that stays as R2. We can keep, we're moving R3 lower to 125.19. If you're looking for a long-term play, the oil discovery in Guyana is beneficial for ExxonMobil's stock price. But from a technical perspective, oil prices remaining low could eat away at their profit margins, which in turn could weigh on their stock price, which is why you might be seeing ExxonMobil moving in a downward fashion. I'll be adjusting the support level just because we've brought that R1 level closer. You can use this wick. So the latest point upon which the company stock price found support, 111.75. If it breaks below this support level, next support could be at 107.60. So taking that wick, which you can see on your screens currently, and I'm currently showing with my cursor. I don't know if that's visible. Let's add a circle, make it easier, or there we go. As you can see in the middle of your screens, and then let's see. And then we do have nope 107.6 for S2, 111.75 for that S1, 75, 100, 102.82. We can keep that as S3. So we've placed support and resistance. It needs to break below S1. RSI is at 31, which does imply bearish market sentiment. We could go more, we could go into advanced stuff, which is Ichimoku theory, OBV, stochastic as well. But these are purely the basics, and you can use fundamentals in combination with some technical indicators. So we've done ExxonMobil. Let's look at NVIDIA. Downward fashion. That probe by China is not looking good for the company stock price and is a bit of an issue. Moreover, with Google's Willow quantum chip, they could be competing against each other. So it's getting a bit crowded at the top, which could further weigh on the company stock price. That remains to be seen. We do have a death cross being formed. I think we have the 50 and 100 moving averages as well. So this is bearish in itself. Might be weighing on the company stock price for a prolonged period of time. So that's for the next couple of days. Maybe it depends on the news. If you look at the daily chart, daily 4 hour, it is at 36. Excuse me, that was on the 1 hour time frame. So it is bearish in nature. If you look at the 4 hour, however, we don't have that death cross yet. The RSI is at 36, which does imply bearish market sentiment. We had placed old resistance R3 on 131.20, so that's the target for the bears that I would be keeping in mind, which could act as a support level. So, okay, to the side of your screens, that's not that easy. So we'll quickly add support and resistance levels for NVIDIA, and then we'll bring this to an end. So I'm using my old resistance levels, which were tested. And essentially, look, this was resistance. It broke above, acted as support on two occasions. This was resistance, did break above, but then found resistance, broke above, is acting as support. Might be due a readjustment though. Resistance broke above and then moved significantly higher, 124.20, 124.75. That's going to be my S2. And let's add this text label in. So the main event of today will be the CPI rates, and then it's the BOC's interest rate decision. So if you're trading FX, you may see increased volatility in the US dollar against the Canadian dollar, and then Euro USD, GP USD, and USD JPY. Essentially, increased volatility in the FX markets today. Keeping S3 steady. Note how it acted as support, so 115.90. So that is RS3. For resistance, so let's see. Right here. I mean, we could add an intermediate. R1 on 38.70. next level here, R1. R2 would be at this high. Note the 3 touches from these wicks acting as resistance. And then we'll probably take this high here as R3, but that's too close to R2. So we have placed R1, R2. Now we need R3. 152.65. The final challenge or the final boss level for the bulls, should they wish to take the company stock price that high. R3. So we have support and resistance. So we are maintaining that bearish outlook. We do have our support and resistance levels. It would be very nice to see if these actually hold up, and that depends on the price action. When it moves lower, let's see if it tests S1, bounces off, and if it breaks below, if it moves towards S2. Same goes if it breaks above R1, would like to see resistance, and then if it does break above R1, would like to see resistance at R2. It will depend, of course, on the market and how it reacts, if there are any announcements from NVIDIA. But overall, it does appear to be moving in a relatively downwards fashion. So we are maintaining a bearish outlook for NVIDIA's stock price. And let's see. Don't think there's anything else I'd like to cover today. So with that, that does it for today. I will see all of you tomorrow, where we will discuss the BOC's interest rate decision, which will have occurred later on today, the CPI rates, and we will prepare for the ECB and the S&B's interest rate decisions, which are set to occur tomorrow. So tomorrow's live, placing emphasis on the euro, gold, oil, and the Swiss franc. Thank you for tuning in, and I will see all of you tomorrow.
Now, if you've just joined, we're going to be talking about how you can set up your training journal and a couple of important pointers as well. So before we get started, as per usual, a risk warning: our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suited for everyone, and you should ensure that you understand the risk involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. Redistribution. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I am an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're gonna talk about how you can get the most out of your MyFX book. We're gonna talk about optimizing your strategy. So what's the best days, best times, best techniques as well. And also we'll be talking about the best direction. So how exactly you can do a bit of trend trading. Okay, let's get started. So what exactly is a trading journal? So it's basically like a diary, and it's a way for you to track your trading performance by recording all of your trades. So you can start a manual or an Excel sheet, or an automated trade journal. And I'll show you guys some examples in a little bit. So, importance of a trade journal. So before we dive into the specifics, let's quickly touch on why exactly having a trade journal is crucial. So trading journals, as we mentioned earlier, serves as your personal trading diary. So it helps you to track your trades, analyze your performance, and ultimately improve your results over time. So some points on why exactly you should start using a trading journal. Firstly, is to track your progress. So it basically provides insights into your performance and helps you to identify patterns in your trades. This also helps you to learn from your mistakes because you're recording your trades and understanding the reasoning behind them so that you can learn from your mistakes, avoid repeating them in the future. Okay, so this self-reflection is crucial for continuous improvement as a trader. Next is to develop discipline. So maintaining a trading journal instills discipline in your trading approach because it encourages you to stick to your trading plan and avoid impulsive decisions by holding yourself accountable for your actions. So I'm sure if any of you guys have ever traded, you will know how difficult it is to really maintain and stick to your trading plan, especially when it's not going according to your plan. Okay, so next, evaluate strategies. So you can identify which strategies are working well and which ones need adjustment or refinement. So this helps you to basically evaluate the effectiveness of your trading strategies. Manage emotions. So emotions can significantly impact trading decisions. So as I mentioned earlier, when a trade doesn't go according to your plan, um, having a trading journal basically helps you to manage those impulsive emotions by providing a structured way to review your trades in an objective manner so that it reduces the influence of fear or greed on your trading decisions. So this also helps you to set realistic goals and track your goals so that you can stay focused and motivated. Improve decision making. We kind of talked about this already. Enhance accountability. So when you're keeping a trading journal, it encourages transparency and honesty with yourself about your performance, fostering a culture of responsibility in your trading approach. Okay, so let's look at MyFX book. So MyFX book is a powerful tool for tracking, analyzing, and sharing your trading results. So from setting up your account to utilizing advanced features, we'll talk a bit about how to leverage MyFX book to its fullest potential. Okay, so let's start off with what should you monitor in your journal. So typically, a trading journal should include the date and time of your trade, basically the open as well as close, the instrument being traded, so whether it's dollar yen, euro dollar, gold, WTI. Position size, yeah, and then direction, whether you're going in for a buy or a sell, entry and exit points, trade result once your position is closed, profit and loss at an absolute level as a percentage of the account size, and your risk and reward. So how can your journal improve your trading? So we briefly talked about this earlier, but basically, since you are able to review your trading activity over various time frames, so daily, weekly, or monthly, it will allow you to find the right trading style, whether you are a swing trader, position trader, intraday, or scalper, and identify your strengths and weaknesses, improve your risk management, as well as have discipline. Okay, so how do you set up your trading journal? Basically, you first have to choose a format, decide on what categories you're going to be trading, followed by capturing trade details, analyze trade performance, reflect on the emotional factors, review and adapt, and maintain discipline. Okay, so these are some of the skills that you will be developing when you set up your trading journal. Performance analysis, learning and development, emotional awareness, risk management, trade planning and execution, accountability and discipline, and confidence building. Okay, so let's talk about these examples really quickly. Okay, so there are a couple of examples that we've included here about how to create a Forex trading journal. So this example is in Excel. So by using an Excel spreadsheet, this example over here, mm, so all of these are automated. So this one is manual because obviously you have to type in the data yourself, as you can see in this example here. Okay, but yeah, so this will basically look like this is what your spreadsheet should look like. With the initial, maximum, the date, the profit and loss. Yeah. Okay. Yeah, and then for automated tradings, you can read this website as well. Okay, there are some which are free and some that you have to pay for. Okay, so the manual option is obviously free since you have to set up the table yourself. So it's really up to you and your own trading strategy. Okay, so you can go ahead and take a look at these two websites. Yeah, I'll go ahead and pop these two websites in the chat as well. So the one that I'm popping into the chat now is the manual one. Okay, and then the automated one is over here. So I won't go too in depth into how to set up your automated trading journal because I think if you go into the website, it will tell you exactly how to do it. So yeah, let's just move on. You can also look at Forex Book. Okay. Yeah, so these are just some of our recommendations. Of course, it's completely up to you and your objectives when you're deciding whether which of these to choose from. But yeah, these are just some of our suggestions. Okay. Okay. Let's move on. So let's talk a bit about optimizing your strategy. So a trading journal is not just about recording your trades, but also about analyzing them to identify patterns and areas for improvement. So let's talk a bit about some strategies for analyzing your trades and refining your approach for better results. So firstly, let's start off by talking about the best times to trade. So market volatility happens throughout the week and it varies. So we're going to talk about which days tend to have higher volatility and better trading opportunities. And we're also going to introduce economic calendars and how you can utilize them to identify when market volatility is the highest. Okay, so let's look at what exactly is an FX news calendar. So firstly, on the left, over here, we have investing.com. And on the right is forexfactory.com, which is the one that I typically prefer to use. Yeah, but they're basically about the same. They give you the dates that you're looking for. You can filter the dates. So if you're looking at this week's economic data releases, you can just filter it to look at this week or this month. And then as you can see from these little colored calendars, it also filters by low to high impact events. And it gives you the forecasted values, the previous values, as well as the actual values once the data is released. Okay, so these FX news calendars are important because it allows you to see at one glance all of the important economic data releases. And these data releases often create more volatility in the markets. So it's important to take note of them. So it shows you the key events such as the GDP, CPI, NFP, crude oil inventories, and even central banks' monetary policy meetings. Okay, so let's understand some high impact events. Firstly, we are looking at the US. So FOMC meetings are the Federal Open Market Committee, and this is the US Fed's way of communicating their view on monetary policies. So these normally come together with a Fed interest rate decision. So if the Fed is dovish, the USD is bearish, and if the Fed is hawkish, the USD is bullish. If interest rate goes up, the USD is bullish, and if interest rate goes down, the USD is bearish. Okay, next we have NFP or non-farm payroll, which measures the change in citizens that are employed from the previous month, excluding the farming industry. Unemployment rate measures the total unemployment of workforce that is seeking active employment from the previous month. Okay, and now crude oil inventory. So these measure the weekly change in the amount of crude held by US firms. So if crude inventories increase, they are inversely related to oil prices, so we can expect oil prices to drop. EIA is Energy Information Admin, and this is a short-term outlook. So it's basically the monthly forecast for the year ahead, the demand and prices across major fuel types. Okay, so some benefits of using the FX calendar. Depending on your individual trading style, it can help to plan trades and allocations for the day, week, or month ahead. And it also helps to alert the individual to upcoming important news events that may affect volatility. Let me know if you guys have any questions so far. Okay, if there are no questions, let's move on. Okay, so now we are getting into kind of the fun part. We're gonna talk about some of our favorite techniques, or some techniques that you should maybe take note of. Firstly, of course, I'm just gonna touch really quickly on this because we recently finished our Fibonacci series. So if you missed that, I think it's probably uploaded on YouTube, but if not, you can email IronFX on their website and they will probably send you the recording or give you the link. Yeah. So I'm just going to briefly talk about the checklist and what things you should look out for. Okay, so for Fibonacci, there are a couple of steps. Firstly, is the market structure clear? So you want to look for big zigzags, and we want to see, a very clear market structure, so a clear up or down. Okay, yeah. So next, identify the recent trend. So are prices going down or up? So it's important to always follow the general trend. Next is to identify recent major swing lows and recent major swing highs. And lastly, connect the two extreme points from the highest to lowest for a downtrend and the lowest to highest for an uptrend. Okay, so let's move on. Next, which is quite important, is your take profit and stop loss levels. Okay, so for your take profit and stop loss levels, it's important to place your stop loss beyond a key confluence level, or if you look here, a key major resistance level. So in this case, we are going in for a sell since our take profit is below. So since we're going in for a sell, we will place our take profit before any levels. So in this case, it will be above any major support level. And for stop loss, we will place it beyond any major resistance level. So in this case, we're placing it above. Okay, so the reason for this is because price is attracted to such strong areas of Fibonacci confluence, or even if it's just multiple swing high levels that line up in the same area, that's also a major resistance area. So price is attracted to these areas. So if your stop loss is right before these areas instead of beyond it, you will most likely get stopped out before the market reverses. So like you can see over here, we would most likely get stopped out if we had placed the stop loss slightly below. Okay, for take profit, we typically recommend to place your take profit before a key Fibonacci confluence area, because when price reaches any significant area, there is a high chance that it won't be able to go beyond it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. And this is one of the reasons why people complain that the market is being manipulated, because they might miss that take profit by 1 or 2 pips. Okay? So now let's talk about another technique, which is the trailing stop loss. So in our previous slide, we talked about, if we go back. So this is kind of a fixed stop loss template. So if we talk about trailing stop loss, it's a type of stop loss that is set at a certain percentage or dollar amount away from the market price. So the idea behind a trailing stop loss is to lock in profits while giving the trade room to breathe. So basically, it means that the stop loss basically follows the market price as it moves in favor of the trade. So the example I have here is we're talking about stocks, but the idea is pretty similar if we're talking about currency. So let's say you buy a stock at $100 and you set a trailing stop loss at $10. As the stock price rises to 110, the stop loss will follow, now at $100, since 110 minus $10. So if the stock price drops to $100, your stop loss will trigger, selling your position and protecting your profits. The trailing stop loss technique can be useful for traders because it allows them to manage risk and lock in profits dynamically as the market moves. So this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that a strict trailing stop loss is not a guarantee that you will exit the trade at the desired price. Market conditions such as gaps or rapid price movements can trigger a stop loss order before it reaches the desired level, leading to an unexpected exit from the trade. Therefore, it's important to use trading stop loss in combination with a solid risk management strategy. Okay, I just realized I didn't show you guys the FX news calendar that we like to use. So let me do that now. Okay, so earlier I talked about Forex Factory being one of the FX news calendars that we like to use. So if you click on the date, so when you go into the page, it looks like this. And clicking on the date, you can select this week, apply settings, and you get the whole list of news events for this week. So if you click on this green icon, you can see that I've filtered it to only the high and medium impact events. But you can select all, you can filter out the currencies that you're looking at and the different event types, apply filter, and yeah, you can see once the actual result is released, it will update. But it will also give you the forecasted values, predicted values, forecasted as well as previous values, and the currencies as well as the different times. Okay. Okay. Also, if you weren't here for the Fibonacci webinars, you can also go onto forexalchemy.com over here. Okay, and you can click on trading guides. How to draw Fibonacci retracement correctly, and it gives you a pretty in-depth explanation on how to draw Fibonacci's. So we have a couple of videos for you to watch as well. What to look out for, unclear and clear market structures. Yeah, what to look out for, checklist. Yeah. So there are also different techniques for Fibonacci. So we're going, I think in this guide we go through each of them. So we have retracement up above there, as well as the different other Fibonacci techniques. So here we are combining them in order to find Fibonacci confluence levels. Yep, so feel free to go ahead and take a look. Okay, let's get back to my slides. Okay, so let's look at the different methods of trading stop loss. So here's a summary of the different types of trading stop loss methods that we'll be going through today. Just really briefly, firstly is the moving average indicator, followed by parabolic star, chandelier, ATR indicator, support and resistance levels, and a combination of these methods. Firstly, we'll start off with looking at the moving average. Okay, so you can see that using our MA, the trading stop loss is triggered when price basically breaks out of it and moves above the moving average. So I think that's pretty straightforward. You can see in this example as well that it got us out before price started to increase. If we look at a trend line breakout, okay, actually this line here is kind of a trend line breakout. The only issue why we can't call it a trend line breakout is because trend lines have to have a minimum of 3 touches in order to be considered valid. And you can see in this case, we only have 2, okay, before price broke out of the trend line. So when price breaks out the trend line, that's typically a sign that price is going to move in the opposite direction, which it did. So when it moved in this downtrend. So we went in for a sell entry, and then placing this trend line here, we got out when price breaks out of the descending trend line. I think that's pretty straightforward. So let's look at parabolic SAR. So kind of the same concept. Here you see when price moves below the parabolic SAR, it's typically giving us a bearish signal. So when price begins to move above the parabolic SAR, you can see that it's moving above it. It's even broken out of the top, the upper, uh, the upper side of the indicator. Okay, so that's a sign that trend is going to change. Okay, chandelier and ATR, same concept as well. Price is moving below, giving us a bearish signal. Once price moves above or breaks above these indicators, then both of them are triggered and our stop loss, and we get out of the trade. So I think that's pretty straightforward because all of these concepts are pretty similar just by using different indicators so that you can kind of substantiate your analysis to show that, okay, price is really breaking out over here, the trend is really changing, so I should get out of the trade. Okay. In this example, so this is just another example. In this case, we have a fixed stop loss. You can see it's a fixed stop loss at the swing high. Our sell entry is here when price breaks below this line. And also it's moving below our moving average. Here's our take profits over here. So you can see instead of just leaving our stop loss here, which you can see is really far away from where price is currently at, by using a trailing stop loss, we can get out of the trade right when price breaks above this level here. Similarly, in this case, price is breaking out of this descending trend line. Stop loss is placed slightly above. Like we mentioned earlier, stop loss should be placed beyond, take profit should be placed before. So we're going in for a sell entry and going towards a take profit over here. Okay. Okay, now let's look at using breakouts as trading stop loss. So breakouts are usually high volatility events and price can spike up and reverse almost as quickly. So stop loss will help you to manage risk, protect your capital, and a trading stop loss can help you to protect your profit like we've seen in the previous slides. Okay, so next, let's move on to our next technique. Okay, trend trading. So here's a super simplified breakdown of how trend trading works. Firstly, you want to identify your trend. So in a price movement of a currency pair. So this is typically done by analyzing historical price charts, and an uptrend is characterized by higher highs and higher lows, while a downtrend is characterized by lower highs and lower lows. Okay, so entry points. Once you have um, identify a trend, the next step is to find an entry point. So in an uptrend, you might look to enter a trade when the price has retraced or pulled back slightly from its recent high. So basically, you're anticipating that the trend will continue. But in a downtrend, you might look for a retracement before the price continues its downward movement. So next we have setting stop loss and take profit levels. So to manage risk, it's crucial to set stop loss and take profit levels. So stop loss is a predetermined price at which your trade will automatically close to limit potential losses if the market moves against you. So a take profit level is where you decide to exit the trade to lock in profits before the trade potentially reverses. Number 4, riding the trend. So once you're in the trade and the trend continues, you aim to stay in the trade as long as the trend remains intact. So basically, in this situation, you would be monitoring the price movement and adjusting your stop loss and take profit levels if needed. Or you might choose to use a trailing stop loss that we just went through as well. Lastly, exiting the trade. So this typically happens when the trend reverses. But yeah, trends don't last forever, so it's important to be vigilant and not get too greedy. And remember to decide to exit your trade and take your profits where possible. Practice analysis. So I think that's pretty self-explanatory, so I won't get into that. Okay. So pullback support and resistance. So these are pretty basic trading knowledge, I suppose. But basically, a pullback support is a strong level of support which breaks out from a previous resistance level, and price is now dropping back to visit it again. So pro tip is when a pullback support lines up with a Fibonacci level, it tends to be very powerful. Pullback resistance, on the other hand, works well when it breaks a significant swing low and then starts pulling back to it. Even better if there are multiple Fibonacci levels that line up with it. So here's an example. So you can see at the red area, price tested this level 3 times with multiple swing highs in line with one another. And once price breaks the red area, it becomes a pullback support level. Then we expect price to pull back or retrace this level, which you can see from the dotted arrows. And this is an example of a pullback resistance. So you can see once price breaks the level, it becomes a pullback resistance, and we expect price to retrace and pull back to the same level, like you can see from these red arrows. Okay, now pullback resistance. Here we have a swing low, and thus a possible support level. With price passing below the swing low support, it is now a pullback resistance. Okay, so if we see in the next slide, you can see that price actually pulls back to this resistance level. Yeah, and once it reaches and reverses off the pullback resistance level, it then becomes an overlap resistance level. Okay, which we will get into now. So overlap resistance occurs when price reacts off a particular level from the top and from the bottom. So the more times that it reacts off this area, the stronger the overlap area. This basically means that there are bulls and bears that are respecting that area, so it's important to take note of that. Okay, so here the pro tip is that if the overlap area lines up with other elements, such as Fibonacci or graphical elements, it will make it even stronger. So that's basically what we call the confluence areas. Yeah, that applies for any support and resistance level that you can find. If you can support it with your Fibonacci, your pivot points, your pivot point indicators, that would be even better. Okay, so here's an example. Basically, you can see how once price breaks below the support at 105.643, you can see how price retraced or pulled back to this resistance level and reversed off of it, making it now an overlap resistance. Okay, here's another example. So here we have a big swing high resistance level. Price surpasses this level and becomes a pullback support where we expect price to pull back. to that level. So in the green areas over here, we see price retrace this level and actually bounce off perfectly. So once price bounces off the pullback support, it then becomes an overlap support. Okay. In our second example, we see two swing highs lining up. So we have a swing high resistance. So price has surpassed this level as well and making it a pullback support. Here we can expect price to retrace to that level. So you take note of the blue circles. Price bounces off this level twice, making it a strong overlap support. Okay. Okay. In this last example, we have multiple swing lows that are in line at the 33420 level. So once price breaks this level, it becomes a pullback resistance. We can see price has tested this level 3 times, 1, 2, 3 over here, making it a strong overlap resistance level. And then once price passes again, then it becomes a pullback support. And once it bounces off that level, it then becomes an overlap support. I think by now you guys have gotten it. So let's move on to our last technique. Okay, so how do you identify a trend? Okay, I briefly talked about this earlier. So how you can identify trends is obviously you can just look at the charts and you tend to be able to identify whether it's ascending or it's moving in a downtrend or whether it is ranging. But if you want to be extra certain, you can try looking for trend lines and trend channels. So what makes a valid trend line is if there are at least 3 significant touches. For an ascending trend line, the touches should be on the bottom and on, yeah, so if it's descending, then the touches should be at the top. So here's another example. Okay, you can see the touches on the bottom and here as well. For descending trend lines, it should be on the top and on the bottom, but same thing, we are looking for at least 3 significant touches. So you can see here, we have about 4, and here we have about 4 as well. Okay, so watch out for at least 3 significant touches for it to be considered a valid trend line, like over here. Okay, and you can see on the 4th touch, price is playing the reaction. Okay, so let me know if you guys think that this trend line is valid or not in the chat. Okay, someone said that it's not valid. Yep, so it is not valid because we mentioned that if it's a descending trend channel or trend line, the touch has to be on the top and not on the bottom. Okay, so if we look at drawing valid channels, the valid channels are if there are at least 4 significant touches, 2 at the top and 2 at the bottom. Okay. Over here, this is an example of a descending trend channel. So it doesn't have to be consecutive like this or like this, but just as long as there are 2 touches. Okay, now let's look at the different indicators that you can use to identify the trend. Okay, so firstly is Ichimoku cloud. So breaking down the lines, it consists of several components, and it's basically composed of 5 lines or calculations, 2 of which comprise a cloud where the difference between the 2 lines is shaded in. The lines include a 9-period average, a 26-period average, an average of those 2 averages, a 52-period average, and a lagging closing price line. So the cloud is a key part of the indicator. Okay, so let's look at breaking down the lines. So basically, when the price is below the cloud, the trend is bearish, or the signal over here is bearish. When price is above the cloud, the trend is up, or the signal is bullish. Trend signals are strengthened if the cloud is moving in the same direction as the price. So for example, during an uptrend, the top of the cloud is moving upwards, or during a downtrend, the bottom of the cloud is moving down. Okay, so let's break down the different lines. Okay, we have the Tenkan-sen or conversion line, and this is the average of the highest high and the lowest low over the past 9 periods. The Kijun-sen or baseline is the average of the highest high and lowest low over the past 26 periods. Chico's span or lagging span is the current closing price plotted 26 periods behind the current time. And Senko span A or leading span A is the average of the Tenkan-sen and Kijun-sen plotted 26 periods ahead of the current time, used as a leading indicator of the trend. Okay, Senko span B or leading span B is the average of the highest high and lowest low over the past 52 periods, plotted 26 periods ahead of the current time, used as a leading indicator of the trend. Okay, explaining the lines. So the first way to use Ichimoku is to identify trends. Basically, the Tenkan-sen and the Kijun-sen. Tenkan-sen is the one in blue, Kijun-sen is the one in red. Those are used to identify the trend of the market. So a bullish trend occurs when the Tenkan-sen is above the Kijun-sen, and a bearish trend occurs when the Tenkan-sen is below the Kijun-sen. Okay, you can also use your Ichimoku indicator to determine support and resistance levels. Okay, now the third way to use Ichimoku is for confirmation. So the Chico span is used to confirm the signals that's generated by the other lines. And if the Chico span is above the current price, it confirms a bullish trend. If the Chico span is below, then it confirms a bearish trend. Okay? So Ichimoku generates buy and sell signals based on positions of the various components. So for example, a buy signal is generated when the Tenkan-sen crosses above the Kijun-sen and Senko span. And a sell signal is generated when the Tenkan-sen crosses below the Kijun-sen. Okay, so how can you effectively use this indicator? So basically, the overall trend is up when the price is above the cloud, and down when the price is below the cloud. Yep, and trendless or transitioning when the price is within the cloud. Okay, so of course you can also use support and resistance, as we mentioned earlier. So yeah, so you can see when price is moving below the cloud, it is bearish. When price is moving above the cloud, then it's bullish. Within the cloud is typically transitioning. Okay, another way is price and MA cross. So if you're a beginner, this is a great way to identify moving averages of different periods to analyze price movements and generate buy or sell signals. I won't get into it, but yeah, this strategy basically captures trends and works best in trending markets. Next, we have the golden death cross, which is a strategy based on the intersection of two important moving averages on a price chart. Okay, so I'm not going to explain how the indicator works, but basically, when you see a golden cross, it's a bullish signal. When you see a death cross, then it's a bearish signal. Okay, channels as well. You can see when price hits the sides of the channel, that's typically a sign that price is reversing off of the channel. Okay, so when you are deciding which settings to use for your moving averages, try and make sure that it touches the bottom of the bottom or the top of the price as much as possible. Same for natural moving averages. And a double break is basically when price breaks below the moving average as well as your trend channel. So basically, as I mentioned earlier, when you have an analysis, you want to try and make sure that you use different indicators to support that analysis. Okay? Yep, so that's what we call confluence. You can see in this case, we are using a trend channel, Ichimoku, as well as moving average, as well as your death cross. Okay, you can see we see this price moving upwards. Okay, so to wrap things up, we'll quickly go through the disadvantages of trend trading. So basically, it can give you false signals, late entries, some choppiness as well, whipsaw trades, which basically means that traders enter and exit positions quickly due to volatile price movements, which can result in losses. Limited profits in ranging markets, and it might require timely decision making. And lastly, noisy price data. So to overcome it, you want to make sure that you have all of these in check. And how you can make sure these are in check is by basically making sure that you use a trading journal so that you can track your trades, track your strategies to see what works and what doesn't. Okay, and this is just to show you guys what an unclear market structure looks like on a 15-minute time frame. You can see it's pretty messy. There's no clear price movements. But when you change to 1 hour, you can see it's pretty clear. Okay, so yeah, so this is just a kind of a rule of thumb to live by. So if the clearer the swing low, the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, that brings us to the end of my slides. Thank you guys so much for joining me today. I hope you guys found this helpful. And yeah, have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.